A few things before we go over these losses. Was it just me, or did he go over these losses pretty fast? I almost could keep up. He act like it was killing him to talk about them losses. Thank you for tuning in. I am your host, Joseph Martin. Hit that like and subscribe button to support the channel and hit that bell icon to receive notifications. If you've watched content on trading, I'm sure you've come across videos that spend a lot of time showing money, winning trades, cars, houses, jewelry, trips, to portray this fallacy about how glamorous and easy trading is, and barely any of it stressing the importance of education. Why is that? Because education is not sexy, especially when creating content, because it doesn't attract a large audience. But educational content is for a specific caliber of viewer. Despite education being an unpopular reality because of the work involved, it doesn't change the fact that education is where the money is. And for the audience that understands that, they shouldn't suffer because the creator is prioritizing views over value. So if you're that caliber of viewer, again, make sure you subscribe to the channel. I first started investing in the stock market about 8 years ago. And in the last couple of years, I've been studying and trading options. In fact, the book that I'm reading on options now is over 1,000 pages. Due to my research and experience with options, I know for a fact that they are one of the most complex financial instruments in finance. So when I saw this video pop up on my feed titled, "I tried trading options for 3 weeks and made enough money to retire," I'm like, there's no way, but I've got to watch this video. But before we go any further, let's go to our disclaimer. The content in this video is for educational and entertainment purposes only. I am not a licensed financial advisor, and nothing shared here should be considered financial advice. Always conduct your own research and consult with a licensed financial professional before making any investment decisions. All securities, trades, and positions shown are for demonstration purposes only. Investing involves risk, and any financial decisions you make are solely your responsibility. So I've watched a few of Jooviers videos over the years, and the name of his channel is Jooviers Gems. I have a link down in the description so you can check out his content and support the channel. From what I remember, the last time I watched this content, he was trading Forex, not options. He was one of my favorite channels to watch when I was researching trading in that market. I ultimately decided that Forex wasn't for me after I learned that the risks far outweigh the rewards. But you have to learn how to do your own research and find out what works for you. Since I have a foundational understanding of options, I thought it would be valuable for someone to watch me use some of the skills I've learned so viewers can see what experience and skills in a field look like by sharing what I do and explaining what I see and why I see it. Let's watch Joovier's video together, and make sure you stick around to the end of this video because I'm going to share something with you that you probably never knew was a skill and give you 4 concepts you'll need to develop a framework to become efficient at it. Let's go.
3 weeks ago, I just got a little bit bored. I really just wanted a challenge. So I decided to start options trading now. Like I said, I've been day trading for over 7.5 years, and in day trading, I'm usually in and out of trades within either a couple minutes or max like a couple hours.
Okay, guys, he says he's been day trading for over 7 years, but he never mentioned what he was trading. Day trading is a time frame, and he's new to the options market. Is it the crypto market, the stock market, futures market, Forex market, the commodities market?
But since I was new to options trading, I decided to more so swing trade these. And basically what swing trading is that you're in it for a minimum of a couple hours, but most of the time you're in it for a couple of days. And that's really what ended up happening for a couple of these trades where I was in them for maybe like a day, 2 days, 3 days, 4 days even. And honestly, it was very, very simple because I've said this multiple times, the higher the time frame, the less price lies. So that's why I decided to start off with swing trading these options, because I'm able to predict price a lot easier and it's a lot less risky when I am using higher time frames and looking for longer trades versus trying to get in and out in a couple minutes.
Day trading is when you open and close a position within the same day. Swing trading is when you hold a position overnight, but less than a year. I've noticed that a lot of traders tend to have their own definition for swing trading, and they tend to define it based off their own trading style. And prices tend to change less rapidly on higher time frames, which makes them less volatile. And yes, hour candles are higher time frames than minute candles, but they're still riskier than day candles and week candles. He's used to being in a trade for a few minutes. So being in a trade for a few hours is a long time for him.
Swing trading these options played out absolutely freaking perfectly. And I realized that it was a lot less stressful because I really only had to take 2 or 3 trades a week. And like I said, the amount that I made was stupid, like really stupid. Now, let me preference this video by saying I'm not an options trader. I don't want you guys to watch this video and think, oh, he thinks he's like the greatest options trader in the world. I don't. I actually think I'm not that good. I understand options. I understand how to read charts mainly, though. That's how I've been able to do this because, like I said, I've been doing this for a very, very long time, and charts is charts. I can read a freaking stock chart. I can read a crypto chart. I can read a freaking corn chart. Yes, there are corn charts. I can read it and I can predict what price will do. And that's what's allowed me to be able to make this money in the options market.
Yes, I agree with him. Chart reading is a skill, and having that skill will make reading charts in other markets a lot easier. But there's a catch. A car has a steering wheel, pedals, and a speedometer, and so does an airplane. But being able to drive a car does not make me a pilot. The way a car behaves is different than how an airplane behaves, and that's the same thing with markets. Certain markets behave differently. That's why knowing what market someone trades is very important. Professional traders understand that different markets behave differently, and you have to trade them for a while before you can get a feel for their behavior. So yes, chart reading is a skill, but I do not agree that they will help you automatically know how each market behaves just by being able to read a chart.
But I'm not claiming to be a great options trader. I'm not claiming to know it all about options. I just wanted to show you guys this journey because I thought it was pretty crazy and just give you guys a little more motivation to learn the skill of trading. No matter if you're going to trade options, no matter if you want to trade crypto, stocks, whatever it is, just learn the skill, because after you learn the skill, you can go in any single market that you want to. I'm not a professional. Please don't be like, Jooviers now an options trader. I'm not an options trader. I trade on the side. My main thing is day trading. But with that being said, let's hop into some of the profits that I've made. I'm going to show you guys the profits I made, show you guys how much I made, how much I risked, all that stuff. Then we're going to hop into the charts and show you guys exactly why I hopped into the trade, why it made me that money, and all that good stuff. So let's get into the juicy stuff.
He's going to be going really fast through these trades. So I want to point out to you what we need to be looking for before I even play the video. It's really obvious how much money he made on this trade. He got it here and he got it here. So we know how much he made, but what we need to be looking for, how much money did he spend on this trade to make the $5,800? That's very important. So I have a saying, one number gets your attention, but 2 numbers tell you a story. So either he's going to have to tell us or we're going to have to be educated enough to figure it out for ourselves.
All right, so the first trade that I ended up taking was on a stock called SMCI. And if you look in the kind of bottom left corner, you see my realized profit was $5,800. Now, this was the first one I took. I was going a little bit light. I wasn't trying to risk anything crazy, so I didn't make really anything crazy at all. But when we go into the charts after this specific trade right here, if I held it like a week longer, and I've been beating myself up about it for the past 3 weeks, if I held it like a week or even up until right now, I would have made close to like freaking $400,000 on this one trade, risking the same amount of money I made because it went absolutely parabolic literally as soon as I closed it. Now, I can't be mad. I didn't lose money. I made, like I said, $5,800, but I could have made a lot more. But that's nonetheless, the first trade we took was SMCI. We made $5,800 on that.
Guys, there's no such thing as leaving money on the table when it comes to trading. The reason why is because you're supposed to determine your entry and your exit before you take the trade. So if you exit a trade and you see afterwards that if you had stayed in it longer, you would have made more money, it doesn't matter. Because hindsight is always 20/20. You need to see what's going to happen in your analysis before it plays out. And you don't want to take this idea into your next trade either, thinking that you need to stay in it longer because last time you left money on the table. Your analysis needs to be based on that individual trade. It shouldn't be based on what you did or didn't do last time. Here's a workbook I created in Microsoft Excel so we can quickly do the math. Learning how to use this software is extremely useful. And since you're going to be frequently calculating numbers, it's an excellent skill to have. So to generate the profit of $5,800, he never told us how much money he used on the trade. That would be the principal. And we don't know the percentage gain, which is another important number. I've already entered the data, and we can see that he spent $5,400 on the trade, which is the principal and the amount of money he risked. We have to use the entire principal because he didn't tell us where he would have exited the trade if he was losing to cut his losses, which would be his stop loss. And under realized gain loss percentage, we can see that the percentage gain was 107% on this trade.
The second trade we took was actually on Disney, right? And Disney made $15,100. So after the SMCI trade played out pretty nicely, obviously I got a little more confident. I'm like, dang, this is easy. Let me risk the whole house on this one.
Don't risk the whole house.
I didn't risk that much on this one either, honestly. But I was able to realize a profit of $15,100 on the Disney trade.
He said, I didn't risk that much money on this trade either, honestly. But he still hasn't told us a specific number of how much money he risked or used on the trade. So we're going to have to do the math ourselves. He used $17,900 on this trade, and we have to assume he risked the whole amount because he didn't disclose his stop loss, and his percentage gain was 84%.
Now, the next trade that we took was on Shopify. Now, this one was up in profit a decent amount, and then it came down, and I just cut my losses because I didn't want to lose money on this trade.
Okay.
But I was able to make $4,800, as you guys can see on the screen right here. $4,800 on this Shopify trade right here.
The principal he used was $4,400 on this Shopify trade, which is the lowest amount of money he risked so far, and a percentage gain of 109%.
Now, the next trade after that I took was Spotify. Now, again, I took Spotify, but honestly, I was supposed to make a lot more money on Spotify. It was going very, very well. But then, due to me not really understanding the Greeks as much as I should, if you guys did not know, on options, it's not just you trading like one price going up, price going down. There are the Greeks that you have to worry about and kind of factor in, which is theta, you have delta, you have the other ones, implied volatility. You have all that different type of stuff that plays into it. And that was
And that's exactly why I was skeptical about this video, because options are one of the most complex financial instruments in finance.
That plays into it, and that was kind of messing up my trade a little bit, so it was making me lose money, so I decided to close this out. I was still able to make $2,400 on the Spotify trade that I took, though, so can't be mad about it. But I was floating in profit a lot more on that trade, but I wanted to hold it a little bit longer. But hey, we can't be mad about it. $2,400.
Guys, if you ever find yourself blaming the fact that you don't understand what you're doing and that's why you're not making bigger profits, you shouldn't be trading. Especially if you're not even losing money on the trade. You should be thinking along the lines of, I need to put in the work to learn about this so I can increase my chances of being profitable. Not my profits aren't as big as they could be because I don't understand what I'm doing. He used and risked $9,600 on the Spotify trade to make $2,400, and the percentage gain was 25%.
This is a big boy, right? So we traded KO. I think KO. What is KO? I forget. Isn't that Coca-Cola? Yeah, wow. Coca-Cola. I don't know how I forgot what stock it was, but I remember now every single time I see Coca-Cola inside of like the grocery store, or if I see that chart, I'm like, dang, Coca-Cola paid me good. Coca-Cola, I made $28,800 on this one trade. And I think I held this trade for probably like 2 days or something like that. So I made $28,800 on the Coca-Cola trade, as you guys can see on the screen.
So for the $28,800 he made from trading Coca-Cola, he used and risked $16,200. If you notice, even though he used more money on the Disney trade, you can see that the profits were lower. He made $15,100 versus the $28,800 he made on Coca-Cola. That's because the percentage gain is significantly higher. He had an 84% gain on Disney, but he had a 178% gain on Coca-Cola, which is crazy.
Now, the next trade is Target. I freaking love Target. My wife loves Target. She spends money at Target, and I make it back. You know what I'm saying?
Mine do too.
$35,775 made on Target.
35,000.
This right here was an absolute beast of a trade. I'm gonna dive into that one definitely for you guys, because Target made me a absolute ludicrous amount of money. I love Target so much. It's my favorite store. I think I probably only stepped into a Target maybe like 5 times my entire life, but it paid me a decent amount of money. So I can't be mad about it. We're best friends. We're locked in now.
His largest profit so far is the most money used and risked at $20,475. And this trade has another crazy gain of 175%. We have to keep in mind he doesn't understand how to trade options, and his risk is extremely high, which means if these trades went against him, his losses would be just as crazy, especially if he doesn't have an exit strategy to limit his losses.
Next trade that we took was what is BAC? Why can I not remember these things? This
Bank
is really
of America,
bad.
guys. Bank of America.
Yeah, Bank of America. This one was going pretty good. At first, I was up, like within the first day, I was up a good amount. But it ended up retracing a little bit and going against me. So I closed it out a little bit earlier than I wanted to. And this one, again, the Greeks were messing me up. I can't be mad about it. I was still able to pocket $5,400 on Bank of America. And I've never deposited a single dollar into Bank of America. So can't be mad about that either. I forgot about this. So it was actually going great, right? This is 2 positions. So I had 2 different positions at the same position, sorry. But when it hit one of my TPs, I figured that price would sell down even more.
He's only showing one
the
closing
first position
order.
I closed, I just took half of my position out at this level here and made $5,400. And then I closed out the rest of it for $7,000 because I thought that price would continue to go down. So that's why I only closed out half of my position. And then when price did continue to go down past my take profit level, I closed it out for an extra, like, what, $1,500, $1,600. So we were able to make in total on Bank of America $12,400, which is absolutely amazing. I love Bank of America. Like I said, never in my life deposited any money into Bank of America, but they paid me $12,400, which was nice.
He mentioned TP, which stands for take profit. And this is a good thing because it tells us he was setting prices he planned ahead of time to exit the trade with a profit. This trade was kind of hard to follow because the profit he showed on the screen was different from the order he was telling us about. The screen showed a $7,000 profit and he had a second order on Bank of America. He closed at $5,400 for a total profit of $12,400. Since he had 2 separate closing orders and only showed us one, we won't be able to do the math for both. On the $7,000 order to close the Bank of America trade, he used and risked $8,600 with an 81% gain. Since I want us to be as accurate as possible with the information he's given us, I'm going to enter the $5,400 down here so it can be included in his total profits.
Now, on to trades that I actually have open right now. I have been holding this Tesla call. Now, this, keep in mind, this is all these trades that I've shown you guys are on Robinhood. This is not my main portfolio. This is just like my YOLO portfolio where I just try new things on. I have another bigger portfolio that I actually...
Guys, he just said that this is an account or a portfolio that he uses to just try things out on. We've went through these trades and he's playing around with thousands of dollars. I just want you to keep in mind what he just said and what we've been going over so far. He's playing with this money in this account, but he's emphasizing how much money he's making when he's playing around trying to figure stuff out. Thousands of dollars. I hope you don't do this. Okay. That's why I'm laughing. It's not funny. It's funny to think about, but it's not funny to do. Because if you're losing a whole bunch of money just doing something like this, because maybe he in a position where he can do this, obviously, but not somebody that's looking to really try to learn and grow their account.
This is just like my YOLO portfolio where I just try new things on. I have another bigger portfolio that I actually do like longer term investing. I've held Tesla for a very long time. I've held a bunch of different stocks for a very long time, but I opened up more so this, they call it a leap option on Tesla.
Yes, leaps.
I want to say about 2 months ago. No, not 2 months ago, like 2 weeks ago. And it's performing pretty nice. Right now it's up $62,000, $62,286. as you guys see on your screen right now. So this one is another one that's
62,000.
absolutely killing
That
it.
sounds crazy.
I don't know how long I'll
11,000 in a
hold this
day.
one. I really am bullish on Tesla overall in the long period. I might, when market opens, close out and take my $62,000. It's been a pretty nice trade here on Tesla. Super easy trade to hold. I'm not gonna lie. It's literally
I would take it out
always
too if I don't know what I'm
green.
doing. You better hurry
So
up.
Tesla has been absolutely killing it. Then the next trade that I literally opened up yesterday is Palantir. I opened up Palantir, and we're now up $14,000 on that. I'm not going to hold this one long at all. I've actually never held Palantir before. This is my first time ever holding it, and I was able to make $14,500 on this.
I'm sure he put a lot of money on Palantir. We're going to place both of his open positions in this section, and these are both going to be unrealized profits, which means he's gained value on the trades but hasn't made money until he closes the positions. Now, the total amount of money he used for the principal and risk on the Tesla trade, drum roll please, $104,300. And on his Palantir trade, he used and risked $100,200. So between just these two open positions in this account he uses to try things out, he's managing $281,336 worth of value. Crazy business. I wonder if he's going to tell us about any losses.
So in total, over the past 3 weeks, I've profited over $181,000 in 3 weeks. My first ever month trading options. And it's simply because I know how to read charts. It's simply because I've put in the years of learning how to day trade Forex, futures, and crypto. And I just applied that same knowledge.
All three of them markets rhyme with whiskey and frisky. No wonder he waited to the end of the video to tell us what markets he's been trading for the last 7.5 years. Oh my gosh, none of them are, those markets are extremely risky, okay, within themselves. And not only are they risky, he's day trading them. Day trading is the riskiest form of trading. Out of swing trading, investing, and day trading, that is the most risky. It rhymed with whiskey and frisky. I'm trying to tell you, everything you're doing rhyme with whiskey and frisky. Woo! Good luck, guys. That's what I'm trying to tell you. Ooh, I needed that laugh.
Into options, and first month on here, I've made $181,000, which is mind-blowing. It's absolutely amazing, obviously.
Guys, there's 3 very important things about what he just said. And if you don't understand the basics about profits and losses, you'll miss it. The first thing is that there are 2 types of profits and losses, and there's a big difference between the two. Realized profits and losses is actual money you've made or lost on a trade or investment. Unrealized profits and losses is value you've gained or lost on an active trade or investment. It's an open position. You're still in it. Those were his Tesla and Palantir trades. So when he just says profits without being specific about whether or not they're realized or unrealized, he could be adding them together. If he did that, it would give the impression he made more money than he actually made. The next thing is your realized losses are supposed to be subtracted from your realized profits so you can know what you actually made, which is something else to watch out for because he hasn't told us about any losses yet before totaling up his profits. And we don't know if that was realized, unrealized, or both.
Now, obviously, I did have some losses, as you see on the screen here.
We got losses.
I had a big loss on Walmart. It wasn't supposed to be this big, but I lost $24,000. On this, it was supposed to be about a $6,000 loss, but what ended up happening is Walmart, I thought Walmart was going to go down, but the next day when I hopped into the trade, because you can't trade options when the market is closed. So when market closed and market opened back up, Walmart was way past my stop loss. So I couldn't close the trade out at my stop loss. So I literally, the first day I was probably negative like $3,000 in it or something like that. And then the next day when the market opened back up, I was down $24,000.
You have to have a plan for what you're going to do if the trade doesn't go your way before you take the trade. So knowing that you can't trade options during extended hours, if that's your normal strategy for limiting your losses, and you know that you can't trade during extended hours, and that's the way you would normally do it, and you trade anyway, then that means that you accepted the risk. Or You need to find a different way to limit your risk. But if you trade it anyway and you don't do that, then you can't blame not being able to do something that you know you can't do for your loss being big. You accepted the risk.
And then the next day when the market opened back up, I was down $24,000, which was sad, but man, had to take that one to the chin. So lost 24,000 here on Walmart, unfortunately. Disney, I lost 7,600 bucks. Freaking hate Disney World. It's the worst theme park to go to. I'm never going there again. Lost 7,600 bucks on them.
Don't go no more.
And on Netflix, I can't give up Netflix, I'm not gonna lie, but they took about $9,000 from me. I lost $9,000 on Netflix. So we had some losses, but as you see, the winners,
3 losses,
absolutely freaking kicked the losses out of the park. Not even concerned about the losses, but obviously I don't win every single trade. So we had a couple losses.
A few things before we go over these losses. Was it just me, or did he go over these losses pretty fast? I almost could keep up. He act like it was killing him to talk about them losses.
But overall, still net positive, still very much in the green, over $100,000 in the past 3 weeks on my first month trading options. So honestly, I can't be mad about that.
And I also want you to keep in mind, he said, and I made over $100,000. He changed it. He ain't say $181,000 this time. So keep that in mind. So let's go to Excel so we can do the math and see what's going on based off what he told us. On the Walmart trade, he used and risked $26,000. And we have a new first place for risk in this section. It was a whopping 92% loss, and he was only able to walk away with $2,000 out of that $26,000 that he risked. I'm so glad that he showed this trade because it shows the brutal reality of what can really happen if you don't know what you're doing. On the Disney trade, the principal and risk was $24,000 with a 32% loss, and he was able to walk away with $16,400 of his $24,000. Last but not least, Netflix. He used and risked $19,460 on this trade with a 46% loss, and he was able to walk away with $10,500. Now we're about to do the math to find out what his average gain loss percentage was, how much money we would have made based on the money we traded with, because he was using thousands. And since it seems like he was adding his unrealized and realized profits and losses together, that's how we're going to calculate it. Just keep in mind that this isn't the way you should normally do this. I totaled up the principal used on the positions, which is the same as the total risk, even though some of this money could have been used on more than one of these trades. Here's his total profits, here's his total losses, and here's an estimate of his P&L. Remember, this is because this includes some of his open positions, and his average gain loss percentage is 55.3%. Here I'm going to give you a couple examples by putting a couple figures in so you can see over where it says ROI, the different returns on investment you would get based off the money that we enter in the example box. And right below it, that's the formula that you use if you wanted to calculate a specific number for yourself. A lot of people who attempt to self-educate to learn a skill often struggle to learn it. And the reason they believe they're having a hard time is because the skill itself is difficult. First of all, you should expect something you don't know how to do the first time you do it to be difficult. If it's your first time and it ain't difficult, all that is talent, and everybody ain't talented. So it's normal to experience some level of difficulty. But learning other skills could become a lot easier to learn on your own if you knew this one thing, which is the ability to learn something on your own, to self-educate, is a skill. And until you take the time to study and learn it, you'll always struggle to learn anything else if you're attempting to educate yourself. I'm about to share with you the 4 concepts I've used to develop this skill to give you the framework that you can use to develop the ability to self-educate. The 4 concepts are irrelevant, incomplete, invaluable, and inaccurate. Irrelevant is information that was important or useful before, but no longer applies due to a change in conditions. An example of this would be reading a book or coming across information that's outdated. Something about it has changed most of the time. It's rules that have been added or removed, or some type of process that's no longer used. Incomplete is information that lacks additional context or resources to be useful. Picture having a fishing rod and a hook with no fishing line or bait. You won't be able to catch any fish without the other resources, which makes what you have useless. You have to be educated enough on a subject to know when the information is incomplete. For example, you should know and understand enough about fishing to know the fishing line and bait are missing. Invaluable is information that is useful, relevant, and complete because you have context and or the resources necessary to apply it effectively. Either you have everything you need or you don't. There is no gray area, and even if it looks like it does, you should never, ever see it that way. You want to put yourself in the best position you can to succeed, and the best way to do that is to have everything you need, not some of it. Now, I know you're not going to always be in a situation to have everything you need, but you should always work towards improving your process, and growing your resources as your skills grow is part of it. Inaccurate is information that was never relevant and is false, regardless of whether it was given to intentionally or unintentionally mislead. In different subjects, there are going to be dogmas. These are things that are accepted as true, consistently taught and practiced, despite not having sufficient evidence to support it. The belief is maintained because it has become a standard in the field, accepted as true by tradition and authority. These things can be a threat to your success because you're sticking to it despite your experience with it. If it's not producing the results you want, you're maintaining your resolve because you believe it to be true regardless of your own evidence that would refute it. The most popular dogma in trading and investing, in my experience in the markets, is EMH, efficient market hypothesis, or EMT, efficient market theory. But we'll say that for another video. This video has been another reminder that education is where the money is. And the book for today is one that I've recommended before because I'm still reading it, which is Critical Thinking Skills for Dummies by Martin Cohen. If you're interested in reading it, you can check it out from your local library like I did. Or if you want to purchase it, I have an Amazon link down in the description, and it does help the channel at no extra cost to you. You already know. I hope that you learned something, and I hope that you earned something. Put your $ or books down in the chat. Leave a comment. Let me know what you guys think. And if you want to learn about FOMO, what it is and how to overcome it, check out this next video. Take care and God bless.